Let's get now to our market action with BD8 Capital Partners CEO Barbara Doran and JP Morgan Asset Management Portfolio Manager Phil Camporeale. Phil, we got a dozen trading days left, roughly, in another amazing year for stocks. S&P up 27+%. You are leaning into risk right now. Overweight stocks, particularly U.S. and mid caps. How much does your positioning depend on rates continuing to steadily come down even after December?
Yeah, so three things that make us excited, and you hit on the first one. So I don't necessarily believe that rates should be lower. I think the 10-year note should be between 4 and 4.5 based on where growth is. John, I think what we're more focused on is rate volatility. So just like the VIX does it for equity, there's an index for interest rate volatility, and we're about to breach kind of the levels that we have not seen since before the March of 2022 Fed tightening cycle. So that's one reason to be excited. Second reason, small businesses, 99.9% of businesses in this company have less than 500 people, which are small businesses. And they told us this week that they are about as excited as they've ever been. The biggest one-month jump in the 39-year history of the index on economic optimism and reasons to hire and lower uncertainty. That's another reason to be optimistic. And then the third piece has to go back to growth. I mean, Atlanta Fed GDP now, so what the fourth quarter is looking at right now, about 3.3%. We have inflation about 2.5 to 3. John, that's close to 6% nominal growth that we think is going to drive earnings next year between 11 at a base case, 15 at a bull case, which is, goes back to the low recession probability of only 15%. So, John, I can go on forever with the reasons why we're optimistic.
That's a lot of reasons to be optimistic, Barb. But a lot of this has been riding with tech. Oracle and Adobe both had some rough post-earnings stock reactions. Those are two big software names. So for the broader market, does this report from Broadcom, perhaps, which has now a sizable software business, put more pressure on?
No, I don't think it does, John. I mean, I think Broadcom, people are wondering what's going to happen with their earnings because we have some near-term headwinds. The chip that they're doing with Google probably has a quarter delay before it ramps up. There's some seasonality in there, but their long-term run rate in terms of AI and how that's ramping up, and even their enterprise software with the VMware acquisition is very positive. So it's really, in a way, operating independently of the broader economy. It's really tied into the AI play. They're really number 2 behind NVIDIA in terms of actually making revenues off of this AI. So I don't think we can read that much into the Broadcom print. And I think the investors will probably look through any short-term shortfall. It's going to be key about the guidance going into next year.
Okay. Phil, you just mentioned NFIB. Part of the reason we saw such a jump in optimism was the outcome of the presidential election. Big day today down at the floor of the New York Stock Exchange this morning. You have President-elect Trump and his entourage, a number of his cabinet nominees all lining up.
Time Magazine behind him.
Time Magazine ringing the opening bell and actually talking to CNBC from the floor of the Stock Exchange, Jim Cramer. So have a listen to this.
We're going to do things, I think, that haven't been really done before. We're going to be cutting taxes still further. We got it down to 21%. We're going to bring it down even below that. You pay 21 if you don't build here, and meaning your product or whatever it is you're building. And if you do, we're going to try getting it down to 15%. But you have to build your product, make your product in the USA.
So he's talking about corporate taxes. As we know, tax reform is very much front and center as he comes into office here. So what is going to matter more here, especially as you did just rattle off this list of things that are making you optimistic about stocks for 2025? Is it going to be fiscal policy or monetary policy?
I think monetary policy is going to fade into the background, finally, after a couple of years, and it's going to go back to the policy from the administration, particularly around deregulation. John mentioned we like mid-cap. I think the financials exposure within mid-cap is really going to take advantage of the deregulation. As one CEO said, bankers are going to be dancing in the street.